Hi, everybody, and welcome to the Late Night DeFi, the podcast where we look into the evolving space around blockchain technology, decentralized finance, and cryptocurrencies. Brought to you by EY and Blueshift, the portfolio based decentralized exchange. I'm Igor Mikalev, partner and head of emerging technologies at EY Parthenon and founding partner of Blueshift.
And I'm Peter Bury, digital content creator at Blueshift.
Amazing. So the first piece of news here is around UBS AG, which is a Swiss investment bank that launches digital bond settled on blockchain and traditional exchanges. So basically what happened there is the atomic settlement technology that is partly private, partly public, called SIX Digital Exchange or SDX, is being used to settle without the need for offline reconciliation, which basically allows for immediate settlement of whatever transactions that took place on the exchange, which is quite cool because the instant settlement is basically the promise of blockchain technology, and therefore it alleviates the need for any kind of other offline processing.
It's a good little step for UBS here to embrace some of the blockchain technology, I think. And it's a really nice mechanism where they're using the bonds in this particular process. So I think it's definitely a good step in the right direction for them.
Absolutely. So I think the lack of offline processing and clearing surely places a certain requirement on existing processes. They need to be restructured, but still it does deliver on the promise of blockchain. So happy to see that delivered by UBS AG. And the second piece of news here is around JPMorgan, which is a big traditional player. And interesting here, remarkable, is that they introduced the first ever DeFi trade on public blockchain. Basically, what happened is that they have deployed, as far as I know, a fork of Aave, which is liquidity pool and AMM on Polygon, which is Ethereum L2. And by means of a liquidity pool that runs there, they allow for real-time FX, foreign currency exchange between Japanese yen and Singaporean dollar, right? So basically, this way, you don't need to have a third party that would facilitate FX for you, and you as big institutions exposed towards the end users and the public can trade against the liquidity pool like that, which is, I think, a real good invention that was matured so much in the crypto world, and now it's brought to traditional finance. So pretty cool.
A very brave move for them. But traditional institution that is really risk adverse, finally taking the step and doing DeFi like most other crypto enthusiasts are. I think it's a really big move by the bank to do this.
Absolutely. Let's see how it scales, because idea of FX by means of a liquidity pool and an AMM is, I think, a very neat idea, but surely it needs to be scalable and banks need to start relying on it. And I think it's potential for massive savings there. So the next piece of news here is around BIS. So Bank for International Settlements will test DeFi implementations for forex CBDC markets, which builds nicely on our JPMorgan initiative that we just discussed. Right. So in this case, BIS wants to industrialize this approach and think about it as a liquidity pool and an AMM approach inspired by crypto markets, as it would be used for basically one of the pillar primitives for the future world of CBDCs, right? So if in the future, when we have CBDCs in place and transactions are digital and programmable, we would have liquidity markets like this available through AMM and liquidity pool approaches.
I think the biggest theme out of all of this is that the banks are doing a lot of work in the background, building all these protocols to make this all happen, embracing blockchain technology and really making strides forward to make cross-border transactions easier, faster, and better for consumers in general.
Yeah, and it's absolutely brave because now they're slow by design. So whenever they become instant, whenever instant reconciliation kicks in and there is no clearing offline, surely it's a completely different set of processes, and we need to rely on machines and on automation to execute those trades and transactions. So I'm looking forward to this world becoming a reality.
Now, in some other news around metaverse and other aspects, Metaverse Schooling to help Japanese city combat absenteeism. So I thought this one's quite an interesting article here. The government data shows that 244,940 Japanese elementary and junior high school students were absent for at least 30 days in the year 2021. And this Japanese city in Toda, Sitamata, adopted a Metaverse schooling service to encourage students, especially those staying far away from school, to attend their classes. And I absolutely love this embrace of technology to try and encourage the students to get back in and participate. And there was I mentioned in the article that kids did actually want to engage and play tag and do in real life stuff as well, which is very encouraging. But this, I think, would really help with students and engagement in teaching in general, especially for those more remote students that don't have easy access. And of course, this is all coming off the back of COVID lockdowns and restrictions and everything else around that as well. So students are still trying to get back into classes. So this metaverse play could be very interesting to try and encourage that engagement back again.
Yeah, absolutely. Because nothing can be worse than just sitting in front of Zoom all day if you are studying remotely. So I think an element of metaverse can be really the unlock that people need to be excited about remote type of schooling, especially younger students. So yeah, all the kudos to the Japanese city of Toda.
Now, in this other article here, Santander UK puts limits on payments to crypto exchanges. So this is another case where banks are playing the parent in the control of how we spend our crypto assets, or how we spend our fiat on crypto, I should say. So the UK unit of banking giant Banco Santander UK notified customers on Thursday of a $1,000 limit on individual transactions with crypto exchanges and a $3,000 limit on total monthly transactions. And this new policy came into effect on November 15th. And they cited here, in recent months, we've seen a large increase in UK consumers becoming victim of cryptocurrency fraud, said the lender, adding, the Financial Conduct Authority, the FCA, has warned consumers about the risk of investing in crypto assets, as money held in customers' crypto wallets is likely to be protected by the Financial Ombudsman Service and Financial Services Compensation Scheme if something goes wrong. It is important to realize that there are a lot of crypto scams out there, and people are being targeted by these various scams and whatnot. And I can see why they're trying to protect consumers. But I think this also comes down to education. Education on what consumers are actually purchasing from these various crypto exchanges. And it sounds like a lot of these consumers are buying scam coins, pump and dump coins, or something a little bit more malicious that do get listed on some of these centralized exchanges in the crypto markets.
Yeah, well, I agree that education is needed, but honestly, I'm not sure that just downright restriction of payments would help education. That sounds a little bit like trying to protect people in quite a crude way, from my perspective. So I would not be bullish on this move, but I can also understand that Santander might be protecting themselves in terms of too much volume of money going in and out crypto exchanges and doing all the AML associated with that. So yeah, I could imagine that it has multiple other underlying reasons.
And I think last time some other UK banks did this, people just voted with their feet and moved banks.
That's right. That's
so
right.
They may see ramifications to this, and crypto savvy investors will just move to different banks.
Surely. Yeah, and talking about different banks, Revolut, the digital bank, starts allowing customers to make purchases with crypto balances, right? So this is a little bit similar to what's possible now with, for example, Crypto.com, a crypto native CeFi company. In this case, Revolut, though, coming from the original traditional payments industry, they at some point added the possibility of holding crypto. But now, in a similar vein as what you can do with Binance or with Crypto.com, you can also allow for real-time automated spending of your cryptos as you are using your Revolut card. Which I think is a neat approach. So you can hold your cryptos, you can invest, you can buy more. And in the meantime, if you want to purchase something, you don't need to bother about anything. So automatically the service sells your crypto and allows you to purchase things. And the good thing about it is that you're also getting 1% cash back on your crypto balance which is a nice incentive. Maybe not as tremendous as what what was there when Crypto.com introduced their card, which I think was like up to 5 or 8%. But we also saw that this is not sustainable. So yeah, I think nicely done by Revolut. Let's keep close eye on that.
Unfortunately, Revolut is one of those services that isn't accessible to myself at the moment, so I can't experience this to see exactly what it's like. But as soon as it starts expanding to other parts of the world where I can use it, it'll be absolutely brilliant to be able to use some crypto assets to pay for various things. So I'm excited about this one. It's a very good move by the bank as well. In other news around tech giants, Google introduces cloud based blockchain node servers for Ethereum. Now, I really do like this. You usually don't see Google or other hosting providers, I should say, also really embrace Web3. And this is one of the first big steps, I believe, from a tech giant from the Web2 industry moving into Web3. So now anyone that is interested in actually managing or hosting their own Ethereum node, you can now do it through the Google Web Services and use their platform to actually host your Ethereum node, which is absolutely brilliant. Takes away a lot of the complications around it. And anyone that's interested will be able to tap into what Google provide and do so accordingly.
Yeah, and I would imagine, so they, I think, will allow crypto payments for cloud services. Now you can host a node there as a service. So yeah, before you know it, a full spectrum of what a DAO needs for its existence will be available with Google, so that we will see maybe the new generation DAOs being born more on Google's infrastructure, which is, I think, a smart set of moves by Google.
Now, I don't think we can skip this particular news item because it is the talk of the town this month, and this is the demise of FTX. Now, I don't want to go too deeply into this because there's so many other podcasts, YouTube videos that talk about the story and what actually has happened. But Igor, what do you think is the outcome really from this? Where and what should people be doing? Where should the market be going after the whole fallout and collapse of FTX?
Yeah, no, I think clearly we will see two types of responses. One will be around regulation. So regulation will have to get more stringent to make sure that it's possible to see the assets. It's possible to do a bit of a stress test on every CeFi institution like FTX or likes. Right, so I think we will see stringency in regulation. And the next, I think, full out trend that we will see is that people will start increasingly using a DeFi infrastructure, even though maybe not all of them are as convenient as CeFi, not all of them are as efficient as CeFi. However, they are at least safer if you know what to do with your own keys and you know all the ins and outs of self-custody. So yeah, A, will be more stringent regulation. B, more people will be going into DeFi.
And we have seen on-chain stats of a lot of people moving to DeFi and moving their crypto assets from centralized exchanges to decentralized exchanges and taking that self-custody as well. There was one mentioned recently where the wallet count of the Cardano blockchain increased by 400% in one day, which is a huge number of new wallets that are being created. And it does show that people are looking at self-custody and using DeFi systems and protocols to start doing their trades now as well. So that's a very interesting move, and I think it's a good thing in terms of decentralization, moving away from those old CeFi products and platforms.
Yeah, so evolving.
Now, in another news item here, and this one's around Binance creating a industry recovery fund to help projects struggling with liquidity. Now, I thought this was an interesting one here. Now, I thought maybe it was a bit of a PR stunt and good public relations after the whole FTX fallout, but there would be a lot of companies that are facing liquidity crunches because of the liquidity being held up in FTX. And now that's all being frozen. And these companies, these good companies that are working and building really cool things that no longer have that access to liquidity. What are your thoughts about this one, Igor?
Yeah, well, I think surely, behind every initiative like this, there is a certain ROI, and I'm pretty sure that CZ is looking at that ROI, and probably it's not the pure altruism behind this, because, well, it's clear that CeFi institutions like Binance, they do need community to thrive, because if there's not going to be any community left, clearly there's not going to be any business left for Binance. So there's a bit of a win-win in stimulating the community and disbursing some of the funds towards affected projects. So I think it surely is a win-win there. So the next piece of news here is about ARK21. So ARK21 shares spot Bitcoin ETF produced by ARK Investments has been postponed by SEC to January 2023. And that's maybe not without a reason. So clearly SEC is looking at other Bitcoin or crypto-based ETFs with a bit of a different eye nowadays, so that we will see if this type of exposure to crypto assets will in a way be given officially through traditional capital markets. So that is an interesting development, and it's surely possible that it will be postponed even further.
I feel like we've been waiting for this Bitcoin ETF in the United States for quite a long time. I don't think a few more months being pushed back to review the whole process is a really big deal. But it would be exciting to finally see some sort of ETF movement and approval by the SEC at some point in
That's
time.
right. Interesting development here from the world of Cardano. So as you know, Cardano is keen on overall being based on scientific research and scientific evidence. So a few researchers in collaboration with Cardano have started developing what they call decentralization index. It's researchers from the Edinburgh University. So it's similar to what we have produced a year ago for our tracker, so DeFiPulse.org, that looks into decentralization metrics and decentralization quality around different DAOs and different crypto projects. So it would clearly be looking at things like distribution of wallet share, distribution of users around them, voting power distribution, clarity of governance, and democracy, potential of governance. All of this will be considered in their index. I think it's still under development, but it's anyway good to see that the community is concerned with that, because whenever you would be investing in a crypto project, or whenever you would be thinking about participating in a DAO, you would definitely like to clearly see what the quality of the DAO is. So is it controlled by one individual, or maybe a set of wallets related to one individual, or is this more of a fair democratic distribution of votes and wallets and voting power, which is something that more likely to draw new participants.
And in some other news that came out from IOG recently as well, and this one's around a new blockchain called Midnight, or a sidechain that may run alongside Cardano. And it's a new blockchain to protect data and safeguard technology freedoms. Now, I find this one quite interesting. It's a privacy style blockchain. Now, this is what the article says. Blockchain developer Input Output Global has revealed it is creating a data protection based platform to allow users to operate more freely and securely by safeguarding sensitive personal and commercial data. Web 2 created World Wide Web communities where people could share and connect with one another. However, this came at a cost of centralization controlled, leading to censorship, surveillance, and a loss of ownership over data. The Web 3 promises a new paradigm without censorship and control over that user data, but so far solutions either reveal too much data or too secret for many use cases. To address this, IG have developed developers behind Cardano has announced that it'll be working to create a new platform which will be principled system to protect people's fundamental freedoms and associated commerce and expression. And it's all called Midnight. Now, I absolutely love what they're building here. And there was a little bit of misinformation around backdoors around this particular platform, but it was all a little bit miscommunicated in the press, I think. But being able to have this platform and protect your privacy while using Web3 infrastructure and DeFi protocols, I think is a very interesting play and something that is really needed in the crypto industry as well.
I think the market is for a while looking for solutions like that, and we for a while have been predicting that something like that is actually coming in. So it's good to see that Cardano have finally finished Midnight and started introducing it to a wider audience, because I hope that new generation Facebooks and Airbnbs and Ubers and whatnot will be based on protocols like that would allow for easy switching between protocols, fair aggregation of data on the user side, and so forth. So a bit of a win-win for platform itself and its users, right? So they don't feel like they're locked in. They don't feel like they are stuck on this platform. They don't feel like they're being used and their data is being monetized. So I think time has come to start building new generation solutions, and good to see that Cardano will be the pillar in building that.
The really interesting thing about the development of this is that they've opened it up to be written in popular language such as TypeScript. So previously, development on Cardano has been difficult. You need to know Haskell, Plutus, and all these other very technical languages that are really different. But this one here with Midnight, a JavaScript developer that knows TypeScript will be able to develop on it. So that's a very different approach from the IG as well. And it should bring adoption for this one as well. So I'm pretty excited to see what comes out of Midnight.
Definitely.
Now, last but not least, the Cardano community also had their global summit, Cardano Summit 2022, and a lot came out of this. I think some of the main takeaways that came out of the summit in particular was the move for the Cardano Foundation to bring ahead the members-based organization, or the MBO, for the Cardano community, as well as the movements towards open source for the community as well. So fully making the code base and Cardano itself open source, and removing some of the restrictions around that, so that the platform itself becomes and embraces open source technology, open source frameworks, to make it as decentralized as possible. So I think they're the major takeaways from the event, and it looked like an absolutely fantastic event at that.
Yeah, I haven't been there, but I heard that it went really excellent. So kudos to all the participants, and I look forward to the future ones.
And that is it for another episode of Late Night DeFi. Make sure you give us that like, subscribe, anywhere where you consume this particular podcast, and we'll see you in the next episode.